It's Wednesday, July 8th. Here's what investors are watching in Korea today.
Welcome to a brisk deep dive into today's Korean market data, exploring exactly where capital is flowing for you today and where it is fleeing.
Yeah, it's definitely a bizarre landscape out there right now.
It really is. I mean, if the market is a GPS, analysts and investors are just driving to completely different destinations right now.
Oh, totally.
The big standout fact today is that 231 KOSPI-listed companies are currently trading below their analyst consensus targets.
Right, 231 companies. That is a massive number. In Korea, they have a specific term for this, goryeo, which is basically the target price gap.
So just the spread between what an analyst predicts for the next 12 months and the actual market price.
Exactly, yeah. And, in a normal environment, a gap this wide might look like this screaming undervaluation signal, like a massive buy alert.
What it's not.
No, not at all. I mean, this isn't a value play. This is a severe capital rotation story that is being driven entirely by the 2026 AI and semiconductor rally. Money is just sprinting toward chips, leaving basically everything else in the dust. And, I mean, these gaps are huge. Look at Biotech. Yuhan Corporation is sitting on an 88.2% gap between its trading price and the target.
Wow, 88%?
Yeah, and over in secondary batteries, POSCO Holdings has an 81.3% gap. And Samsung SDI is right behind them with a 76.0% gap.
Which is just wild for companies of that size. And this capital drain, it's completely reshaping fund flows across the board.
Yeah.
If you want to see how extreme this rotation actually is, just look at the KOSDAQ Global ETF.
Oh, right, the ETF flows.
Yeah, it has recently shed 60% of its peak AUM. Capital is literally just hemorrhaging out of it.
Wait, isn't that a quality screened product? I mean, why is it bleeding assets if the underlying index is actually outperforming the broader KOSDQ?
It's a fair question, but market momentum is just so intensely concentrated in AI right now. Even high-quality screened Korean equities just cannot attract incremental flows.
So it's essentially institutional tunnel vision.
Basically, yeah. When institutional capital sees one sector generating immediate, undeniable returns, everything else just gets ignored, regardless of the underlying fundamentals.
Right, so even if a battery company has flawless fundamentals, it's virtually invisible to a fund manager who is tasked with capturing that AI upside.
Exactly.
So since institutional capital is effectively redlining everything outside of AI, how are these starved companies surviving? We are actually seeing them rip up their balance sheets to generate their own liquidity.
Yeah, they really don't have a choice.
Look at CJ Cheiljedang. They are selling off 230 billion KRW, which is about 160 million USD in non-core asset plants, specifically targeting their Incheon and Chungnam facilities.
Wow, selling off physical plants.
Yeah, just to accelerate their balance sheet restructuring.
I mean, that is a direct survival mechanism right there.
Yeah.
When the broader market just refuses to supply non-tech companies with cheap capital, well, they can't exactly issue new shares.
Right, or take on expensive debt.
Exactly, because doing that would just tank their valuations even further. So selling hard assets is really the only viable lever they have left. They're trading physical plants for liquidity just to weather this AI rotation.
So if you're watching your biotech or battery holdings bleed despite strong analyst ratings, the takeaway here is that you're fighting gravity, not fundamentals.
The fact that 231 KOSPI names are trading below targets is purely an AI-driven capital rotation story, not a value catalyst. Tomorrow's watch point is whether earnings guidance in biotech or battery names gives analysts a credible reason to revise targets lower, or gives capital a credible reason to return. Furthermore, the KOSDAQ Global ETF's deep AWIM decline confirms that until this momentum shifts, even quality screen products will struggle to attract institutional interest.
Which leaves you with a pretty provocative thought. If top-tier battery and biotech companies are being entirely starved of capital right now, what kind of explosive market correction might we see if the AI momentum even slightly fractures? That's today's AI PRISM. Markets Daily, AI-assisted, human-reviewed. Juan Ifra. Back tomorrow.